Korea's central bank has decided to keep its key interest rate unchanged at 1.5%. And as for economic growth this year, that's holding steady at 3%. Thursday's meeting on monetary policy was the first one since the BOK governor was reappointed last month. Hyesung has the details.
The Bank of Korea kept its growth forecast for the local economy for 2018 at 3%, the same as its previous projection made in January. But the bank lowered its inflation rate projection by 0.1%.
We slightly lowered the inflation rate projection to 1.6% for this year. First quarter consumer price inflation came in lower than expected, in the low 1% range. This was mainly due to a drop in livestock prices and the slower pace of increase in global oil prices.
With first quarter inflation rate at 1.3% below the bank's target of 2%, the BOK unanimously decided to keep its key rate unchanged at 1.5% Thursday. This decision follows two freezes in January and February after the bank's first rate hike in over 6 years in November. The Korean won has strengthened against the U.S. dollar, hitting a more than a 3-year high against the U.S. dollar last week, which further weakened inflationary pressure by suppressing import prices. Domestically, household debt concerns and the high unemployment rate also led the bank to hold its key rate. The unemployment rate hit a 17-year high in March, with the unemployment rate for Koreans aged between 15 to 29 reaching 11.6%, mainly due to slower job growth in the service sector and corporate restructuring. Externally, the governor said the global economy is continuing its robust growth, but said concerns about the U.S.-China trade spat have led to recent volatility in global financial markets, and that major advanced countries' pace of monetary policy normalization adds uncertainty. The bank said it will closely monitor the country's inflation rate, trade environment, and geopolitical risks when setting its monetary policies. Hyesung, Arirang News.